Hey, it's Tuesday's market SITREP here at TGO, Top Gun Options. I'm Wiz, Matthew Buckley, the Chief Options Strategist, and had my Starbucks all morning hanging out and watching Jerome Powell, the new Fed skipper, and his congressional testimony. Good stuff. A lot more hawkish today than the Fed minutes were last week, and we had a good market rally off those kind of dovish Fed minutes, but I always said, hey, what the spoken word is a lot more important. So he's not shocking at all. I said the same thing. Hey, full employment. We're at full employment, right? He's saying the low fours. What are we at? 4.1% employment. I think we're looking pretty good as far as employment's going. GDP growth is solid. Earnings growth is solid. He said that, hey, the recent volatility is to be expected, and maybe equities might have been a little over their ski tips. Nothing, not rocking the boat. The economic outlook remains strong here in the United States. So this is why we got this right. I told my members, hey, rip your face off rally in January. I said the first or second week in February, we're going to take a break. And as we started to take a break, the short volatility traders, the 8 billion folks who were short vol, got obliterated. This was a nice orderly sell-off. There wasn't any panic selling. This is what I call the Colonel Jessup from A Few Good Men sell-off, right? We want a sell-off. We need a sell-off, and we got it. And then once we ended up between the 50 and 200-day moving averages, game back on, right? The 50-day, as I predicted, I said for about a week and a half, we're going to hover around this 50-day moving average, and then we're going to burst through it. We're doing exactly what I predicted we're going to do. Markets, it's digesting the Fed chief comments, so it's walling around here. But consumer confidence, I briefed yesterday that today we're going to get the Conference Board consumer confidence number. It crushed it, 126.2. We got 130.8, and that's the highest beat since the early 2000s. Look at that, the best beat since November of 2000. That is very, very, very good news. So it's saying consumers are confident. However, durable goods, right? Durable goods, things, dishwashers, refrigerators, things that are durable and they're goods, took a little bit of a hit in January. Something else that I think is comical. Where is it? It's this. 2017 was my best year of trading in a quarter of a century of doing this. Goldman Sachs had its worst year since 2004 last year. It's comical, folks. Remember, the so-called smart money, they put their pants on the same way you do, folks, and they're not necessarily deserving of that term smart money, right? Remember Goldman and Lloyd Blankfein and all these guys saying Hillary Clinton's going to win, and if Trump wins, the economy and the stock market goes to zero. Yeah, that's a lot of crow that they're eating. But again, the Fed chief is keeping everybody calm. And one of the Fed lieutenants last week more or less said, hey, to get 4 Fed rate increases, things got to be just flawless. So I think the market's pricing in 3, maybe 4. When I checked this morning, the Fed funds futures rate for a rate increase next month, and it almost is next month, is 85%. So they're going to raise in March, and that is expected. Another thing that we predicted back in September, October, back in the fall, I said, that's it, folks. The FAANGs, I'd be out of the FAANGs. The only FAANG, and I really don't think it's a FAANG, Amazon uses technology. I don't think they're necessarily a tech company. They're a services company. I said that would be the only techish stock I'd be in. I said, get out of Facebook. Way too much political crap, way too much liberal crap. Look at these headlines. NBC News, Silicon Valley faces make or break moment amid big tech backlash. You don't, Jeff Bezos, I'd be smiling like that too if I made $5.6 billion in profits last year and paid $0 American dollars federal tax. So all these limousine liberals in the tech companies are all over the place, and then of course they print money. And I love like a Bill Gates. Was it last week or 2 weeks ago? Like, I think I should pay more in taxes. Blah blah. Then do it, dude. Send a check to the Treasury. Stop talking and do it. Put your money where your mouth is. So tech companies, man, whether it's the iPhone losing steam in Asia and China, their biggest market, to cheaper competitors, or Facebook, or this clown who I think I saw a shareholder lawsuit finally filed against this guy who says, I don't care about profitability, I just want to do good. Okay, boy genius, then take your company private, because as a CEO, you have a fiduciary duty to your shareholders, right? We're starting to see a lot of shareholder lawsuits over Wynn. Take a look at Wynn. We had have an iron condor on. Somebody posted in the Ready Room yesterday, like, oh, the short calls are in the money. I'm like, is there any plan to adjust it? Nope. No. Why? Because of this. It's down another 1.5% today, way below 167.5. So actually, we have our primary live trade brief coming up here at 1 o'clock. We're doing a joint brief because yesterday I had to host a timing research show, and yesterday I sent out a text alert to my weekly options members. Another Amazon weekly trade, the 14.95, 14.97.5. Bull put spread for 75 cents, 30 contracts. I think that's priced at about 65 cents last time I looked. No, it's bad. It's right around what I got into it yesterday. So this is essentially flat. Amazon, but holding this trade through Friday. That's when it expires. Amazon's just, look at the quote pullback with the overall market. Not even, what a great buying opportunity to get in Amazon. So we'll be talking about all those positions today in our live trade brief at 1 o'clock. And that's all she wrote. All right, folks, have a great rest of your day. Happy hunting. Make sure you hedge. God bless, and I'll see many of my members at 1 o'clock in the briefing room.